change your mind like a girl changing clothes for you. Yo, 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 yo. Welcome, welcome, welcome. Welcome, legends. Hello, 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 hello. Yo, Jan, what's up, brother? How we doing? How we doing? What's up, chicken? Chicken in the live. Yo, 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 Dimmy in the live. Come on, boys. Let's go. What's going on, legends? Good morning. Good morning, good morning, good morning. Good morning. Boom, 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 boom. Let me check if my screen is centered. Let's see what the market is saying for today. Let's see what the market is saying for today. Alright, we're good in this way. Okay, there we go. Aight. My analysis is getting good, bro. I marked the exact zone you have last night. Yes, sir. Have a rose, brother. Thank you, Dimmy, for the rose. I appreciate it. Hell yeah. Starting off the live with a rose. Beautiful stuff. Live goal achieved. Check the goal. Apparently, I've achieved some sort of live goal. N4, nice, bro. When you start getting the similar analysis, it means that, you know, you're starting to do good. On NQ, guys, we are reacting beautifully. We reacted beautifully off our buy zone last night. I don't know where this surge of volume came in to NQ yesterday, but yo, Dimmy, also get back to me on Telegram, bro, regarding your friend, because the guy is just signal botting, bro. He's just chilling in the Discord. He hasn't got back to me, he hasn't reached out, he doesn't talk. So let him know, like, if he wants to stay in the Discord, he's got to interact a little bit. No point in him just being in there just to be in there. Welcome, guys. Welcome to the live stream. Thank you for the follow. Oh, I need to clean some files here. Jesus. I need to clean some files. Boom, 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 boom. What's the message of today? What's the message of today? If you wouldn't take the trade with your biggest account, don't take it with your smallest. Oh, that's some sauce. That is some sauce right there. If you wouldn't take the trade with your biggest account, don't take it with your smallest. Now that is what I am talking about. That is a good message of today. What do you guys think of that one? That one's for real good, huh? Because sometimes you're always thinking, yeah, I'm just gonna enter this trade, I'm gonna risk small. Lost big time yesterday. Damn, Dimmy. What did you do? Did you short or long on gold? Appreciate the likes, guys. I appreciate the likes coming in. Already at 1K. Let's go. Let's get it to at least 2K. Let's get some likes tapping on the screen. While we wait for everyone, let's just go through gratitude. Another beautiful day. I'm grateful that I woke up today. Thank you, universe. I'm grateful for the air that I breathe. Thank you for my healthy body. I'm grateful for the opportunity to trade and build my future every single day. I'm grateful for everyone who believes in me. I'm grateful for that I believe in myself. I'm grateful for the money that I'm making on a daily basis, the money that is attracting, coming into my life. Thank you for my friends. Thank you for my family. Thank you for the opportunities that will come my way. Thank you for all the blessings that I have received. Thank you for my legs that I was able to walk to the toilet this morning. Thank you for my brain to be able to read the market. Thank you for everything. Stop spamming. How did you make that? I made this with Claude Code, bro. We see your message, bro. Philip, I made this with Claude Code, bro. Yo, he's tripping. Yo, Seven, welcome to the live stream, brother. Welcome to the live stream. Philip, this is my platform, bro, Mind Edge. If you're in the Discord, you get access to this bad boy. for free lifetime. But otherwise it's 9 euros a month, which is nothing. It's like 30 cents a day. I'm pull up later because I'm on 3% getting a kebab. Yo, kebab sounds lovely right now, man. I'm still fasted. The kebab sounds lovely right now. With that nice little garlic sauce on top with some little chicken kebab. Oh, talk dirty to me, talk dirty to me. All right. Let's see, we've done our gratitude. We set our mind into a positive frequency. Guys, you always, every single day, okay, before you hop on the charts, you want to go through, things that you're grateful for in your life. It takes 5 minutes, and I promise you, the moment that you open your heart up to gratitude, good things will come. It's like you're putting yourself on a high frequency, attracting all the things that you want into your life. Red folder in 48 minutes. Isiko, hello. Welcome, brother. Welcome. Thank you for the likes. Inshallah. Neo, what's up, broski? What's the news for today? Let's check it out. Oh, the lag is tripping again. Are we tripping again with the lag? Are we good? Today it's Longs. Bonaz says, morning SF90, morning brother. Bonaz, morning. Thank you for all the likes, guys. Already at 1.k likes. Insane. Beautiful. I hope you guys are having a beautiful start to your Thursday morning. Let's see. Yesterday was a very good day for me in the markets. Very good day for the group in general in Discord. Most of us did print except Jimmy. But it's all right. It was a very, very good day. Today we've got some red folder news coming out. Let me put this in the thing for you guys so you can see. We have core PCE index coming out at 330, and final GDP, whatever that means. What does core PCE even mean? Where is this? Do I have it here? Core PCE, unemployment claims, ESB rate decision, US PPI, FOMC, US PPI. No, it's not here. Core PCE is not here. But what does Forex Factory say it is? It says it is. Are you in Kenya, Shush? Yes, brother. I'm in Kenya. But 7. It's not in 1 hour, brother. It's in 3 hours, bro. It's in 3 hours and 15. What does this news event even mean? I mean, core PCE, usually it doesn't really affect the market too much. But it may do just a tiny bit. Since it's the only red folder news this week, it may give us a good reaction today. So let's see. We will not really be looking for trade. I mean, we'll be looking for trades, but we won't be entering trades before this comes out. You always want to try avoid being in positions before red folder news, because you don't know what's going to happen, especially with the whole economic, situation going on with the war. You don't want to be on the wrong side of the market. It's better to let the red folder news come out, and then we trade what happens after. What pair do I trade? I trade Nasdaq and gold. And I trade Bitcoin as well. Right. So we have identified that we do have red folder news coming out. Okay. So I will be looking for trades after. Red folder news, but we're still going to get our analysis done so we can be prepared for today. Okay. This morning I already sent out the analysis in the Discord. For those of you guys that are in, shout out to the members already inside. We did a couple scenarios. We're going to go through it on live stream again. But this is what I put out this morning. I say today's gold's different scenarios. I always try to give an overview of the day so that, however style of trading that you have, I do try to, simplify where the targets could be for today and what are the targets that we could take. So scenario 1 is we pump from here to the sell zone that we marked out, looking for shorts targeting the previous day low and maybe even lower to the monthly fair value gap. Okay, that's scenario 1. Scenario 2, we sweep previous day lows first and we come up to our sell zone. And scenario 3 is we dump hard from here down to the monthly FVG at 3,915 and then look for longs as a retracement. Right, and then I do mark out also, the different scenarios like this. So we will go through all of these today. Why did I see these? What did I see? Then we're going to go through Nasdaq as well. because we did get a pretty big pump yesterday on Nasdaq during some weird hours. It wasn't even hours that during session. Like if you look at the indicator that shows me when all the different sessions are, right? I've got Asian session as red, London session is yellow, and I've got New York session is green. And look, we got this huge pump on Nasdaq yesterday in between 0 sessions. It's like a weird time. Usually this is not really the best time to trade. So, hey bro, how do you earn? I don't earn, bro. I haven't made $1 single from trading. It's been 5 years. Bro, I'm starting to go bald because of trading. Yeah, trading will make your hairs go gray, but you know, I'd rather this than nothing. It's trading is just one of them things that just makes you want to rip your hair out one day, and then you know the next day it just makes you want to jump up and down like a little kid. My headline's hitting itself. Right. Okay, let's go into gold and let's do some analysis. Okay, so guys, on gold, okay, let me just exit absolutely everything. Okay, and we can start from fresh. How do you manage staying consistent? That's the issue I'm currently facing. Well, this is my job, bro, and this is my passion too, so I don't really have an issue being consistent. If you're having issues with being consistent with trading, it just means that you don't love it enough. That's pure and simple. With anything really in life, if you struggle to be consistent, it just means that you don't want it bad enough and you don't like it enough. For me, going on the charts every single day, it's an absolute blessing. I love looking at candlesticks, and it's like a video game for me. You know, and every single day I'm leveling up the character, getting better. My analysis is getting better, my execution is getting better. I've got a whole community now of people following the way that I trade. So at the same time, I have a level of responsibility as well. So that's how I stay consistent. Okay, so on gold, guys, we clearly see we have about 5 days left of this monthly candle. Okay, so we'll see what these next 5 days are going to bring us, right? But for now, looking at this monthly candle currently, we do have on the higher time frame, okay, we do have this monthly fair value gap approaching NNN. Thank you for the follow, brother. I appreciate it. Okay, we do have this monthly fair value gap here, okay, currently at 3,931. Okay, so on the highest time frame possible, this is my draw of liquidity. Okay, you always want to identify a draw of liquidity, okay, on the higher time frame, so that on the lower time frames you can start building your story, building your narrative, targeting this higher time frame draw. Okay, now what I've noticed, guys, through experience over these past few years, is that when there is a target that is fairly obvious, right? When there is a target in the market that is fairly obvious, price doesn't go straight to it. It has happened and it can happen, okay? But usually what price will do, right, is just before we hit this higher time frame target, we might stop just before it, okay? Form some sort of, liquidity below, okay? And then we might get a little bit of a retracement, okay? Take out all the people that were, FOMOing shorts during this big move down, okay? And then we finally hit the higher time frame target, okay? There is more chance, guys, that this right here, okay, becomes the monthly low of this month, okay? And then now for the rest of these 5 days, we might actually retrace up higher, okay? And when next month opens, price is gonna come down and sweep, the monthly low. That's usually what I've, gathered through the experience of these years, right? Is the fact that when there is a higher time frame area that is very obvious, price will actually come up first, and then the next month we will then come down to it, which makes sense, right? It does make sense. However, we could also come down straight into this gap, and then next month we can see if we can get retracements up higher. That is also a possibility. However, I say this because I'm not going to be, too focused on looking for shorts straight away down to this area, because this does make sense if this is the monthly low of this month, and then next month we open up and we come and take it, right? And we come to also tap into this monthly fair value gap. Okay. If we scale down as well to the weekly time frame, right, we still have 2 days left. We have today and we have tomorrow left of this weekly candle. Right now, this weekly candle is looking very bearish, okay? But it hasn't closed yet, okay? So we do still have potential that we are gonna come up and retrace a little bit. I guess it does depend what price wants to do today and tomorrow, okay? Now, in terms of why also this monthly fair value gap is also a good target, is because if we scale down to the daily time frame, right, you also see that there is also relatively equal lows, right here inside of this. So this is a valid target. I think gold has a 99% chance of coming in here. Doesn't mean it has to come in here this month, okay? We only have 5 days left. We could also come in here next month, as I just said with my other scenario, okay? But this target, watch this target on your charts, guys. 3,923, okay? Make sure you have this level marked out on the charts, because the higher we come, the better it is for us, right? The higher we come up on gold, the better it is for us. Why? Because we know that on the higher time frame, the probabilities that we are going to come down to this area is pretty high, okay? So we can use this idea to say, okay, if price is going to retrace from here, okay, this is better for us because it's going to give us a better entry to allow us to come down to target this area, okay? So mark this out on the charts, okay, have it out, and we will have a short bias up until I will have a higher time frame short bias, okay? However, in the lower time frames, we're yet to see, okay? But mark this out, 3,930. Can you show me that analysis with volume thing I showed you in the 30-minute time frame? Yes, Marius, when I go through my key levels, brother, I will go through the volume profile for you, brother, okay? Now, guys, what do we do every single time that there is a new daily candle? In a new day, what do we always do? We mark out yesterday's low, okay, and yesterday's high, okay? I always mark this bad boy out in red, okay? You can mark it out in whatever you want. I simplify this and do PD low, okay? And let's mark out the PD high, okay? Now, is price closer to the previous daily low, or is price closer to the previous daily high? Sal Fisher, thank you for the follow, brother. Are we closer to the high or are we closer to the low? Right, we're obviously closer to the low, okay? So it would make sense, guys, okay, that we do have the previous daily candle low as our target for today, right? Because during a new day, we will always, 90% of the time, either take the previous daily high or the previous daily low, okay? Every single day. There is some days where price action just goes sideways, okay? That does happen, right? But in that case, we're building an engineering liquidity for a move up or down, right? But for a typical day, we will always either take the PD low or the PD high. Since we are already close to the PD low, okay, I do believe that if we do retrace a little bit higher, okay, and in New York session, we haven't hit this previous daily low yet, okay, I wouldn't mind taking a short down, targeting it, okay? But now let's scale down to the lower time frames to see whether that story, okay, whether the lower time frames match my ideology, okay? Let's scale down to the 4 hour. What do we see on the 4 hour? Do we see any fair value gaps or any order blocks or any confluences that could take us down to this previous daily low? Okay, guys, this is how you need to start analyzing the charts in your mind, okay? Look, on the daily time frame, we are day traders, okay? We are day traders. So what do we care about? We care about what the daily time frame does, okay? So if the daily time frame, we recognize that we want to come down to take the previous daily low, okay? How are we gonna get to this target, okay? This is the job of you to find out in the lower time frames how price is going to come down to this previous daily low, okay? So on the 4 hour, I am looking for things that will send price lower, okay? What are some of the things that could send price lower? Order blocks, fair value gaps, equilibrium, okay, the 50%, okay? All of these things are things that could send price lower. So that is my job, that is your job, to find things on a lower time frame that is gonna match your idea for the higher time frame. Plagosi, thank you for the likes, I appreciate it. You guys are the best, already 2.6k likes, you guys are on fire today. Okay, so on the 4-hour time frame, if it fails to re-break the high, also exactly, if we fail to re-break the high and we tapped into some sort of resistance zone, that could also take us down lower. Okay, you need to find what is going to match your idea on the higher time frame. Okay, so right now looking at this chart, okay, the only really interesting thing that I see is this 4-hour fair value gap up here, okay, at 4,440. Okay, so we can mark this out. Right now, my job right now, guys, is to look for some key levels. Friday, thank you for the follow, brother. I appreciate it. Welcome to the 1%. Okay, so my job right now is to find key levels on the chart that could take us down to the previous daily low. Okay, now we've identified this 4-hour gap. What else do we always do? Whenever you see a leg like this, a trading leg, okay, whenever we've had a series of down candles like this without a retracement, the first thing that you always want to do is mark out where is the 50% level of this range. Okay, every single time. So what do? We take out our trusted Fibonacci retracement. Okay, this is our best friend, our tool that we use every single day. Okay, and how do you pull the Fibonacci retracement? Okay, you want to pull it from the high, okay, from the high that started this move down, the most recent high, which is this one here, okay, all the way down to the low, okay, that we created here, where you can see price starting to pull back. Okay, why? Because this is called a trading leg. Okay, it's a leg. Okay, all of these are filled with legs. Okay, price action is always called legs. This is a leg, okay, from the high to the low. Why? Because look, there is a series of down candles without a retracement. Okay, this is a leg. Also here, this is a leg. Look, a series of down candles. This is the low, this is the high. Okay, so whenever you want to pull your Fibonacci retracement tool, you always want to, hi bro, how high do you see this going? M4, we're gonna check it out now, bro. We're gonna check it out now. On the higher time frame, I do want us to come lower, so we're going to check it out. Okay, so what do? I pull the Fibonacci retracement from the high, okay, and I drag it all the way down to the low. Okay, and what do you see, guys? What do you see? I love when this happens. Look, the 0.5 level is lining up perfectly with this 4-hour fair value gap that we marked out. Okay, look at this. This is a high confluence zone. A 4-hour fair value gap lining up with the Fibonacci 50% retracement level. Okay, so this is already building the idea in my mind that if price was wanting to come up to this area, okay, the chances of us getting a rejection is going to be pretty high. Okay, now that we've done our chart analysis on the 4-hour, okay, let's see quickly before we move down to a lower time frame. Do we see anything else that could potentially give us another key level? We do. I have identified that right now. Look, we have the 0.786 as well on the Fibonacci, okay, in line with this 4-hour order block. Okay, I like to mark out my order blocks from the wick to the body. Okay, there is people who trade supply and demand. Okay, they are probably going to call this a supply area, right? Why is this a supply area? What is an order block? An order block is the up move candle before a series of down moves that break structure. So like the previous candle in the opposite direction before the start of the down move that breaks structure. Okay, that is what an order block is. So you can see it's pretty clearly. Look, we have an up candle and then a series of down candles that we ended up selling hard. So this area here is an area of supply. Okay, also known as an order block. Everyone has a different name from it depending on how you trade. And we can see that this area here, okay, is lining up with the 786 Fibonacci. So if we have one or more confluences lining up, then that is already valid enough for us to have it as a key level. Okay, what do we also see within this range, guys? Look, we also have a 4-hour fair value gap within this area. Okay, so perfect. Look at that. We have the 0.786, okay, plus a 4-hour fair value gap, okay, plus a 4-hour order block. There we go. We have just identified a sell zone. Why? Because there is multiple confluences lining up in the same spot. Okay, so we can mark this out as a sell zone. Boom. Now, as we go lower in the time frames, we can obviously make this box smaller. Okay, we are currently just on the 4 hour right now. So this is all we see, but we've marked it because we can see all these different confluences in here. Okay, let me lock this up so it doesn't move. Okay, let me lock it up. There we go. Okay, now the next zone that we identified was down here. What we have the 0.5 fib level plus the 4 hour fair value gap. Okay, do we also have any volume? Okay, one of the ways that you guys can also see where there is the most price, where there is the most buyers and sellers within a trading leg. Okay, you can use this little tool here called the fixed range volume profile. Okay, right here, the fixed range volume profile. What you want to do with this tool is it allows you to see where there was the most volume traded, okay, within this move down. Okay, because where there was the most buyers and sellers, okay, if price was to come back to that area, it would mean that the likelihood of them stepping back into the market and trading is higher. Okay, so we use this the exact same way also as the Fibonacci retracement tool. Okay, so we pull it from the high, okay, and we pull it all, we basically drag it. You don't click it at the bottom, right? We start it from the high, okay, and we drag it to the right and we click again. Okay, look at this, guys. Look at this. It shows us that the most volume that was traded within this move down, Nico, thank you for the follow, brother. Okay, the most volume that was traded within this trading leg is down here. Okay, it makes sense, right? Because there is the most buyers and sellers here. Price has spent the most amount of time here. Okay, however, we can also see that up here, right? This is also called the value area high. Okay, the top. Okay, is also lining up with this Fibonacci 0.618 and 0.65 level. Okay, so we have two confluences lining up at this area here. Okay, now, is this my favorite? Not really. Why? Because this level here honestly is better because we have the 0.5 plus a 4 hour. Here we only have the 0.618. Unless we're going to scale down now and we're going to see if we can find any more confluences. But let's keep it in mind. Let's keep it in mind. Okay, let's scale down to the 1 hour. What do we see on the 1 hour that could be interesting? Okay, we also have within this area here, okay, we also have Asian highs, which is also a draw. So we can add that on, Asian highs. Okay, Asian highs is in red for me, right? Using the indicator that I have on TradingView, it marks out where all the different session highs and lows are. Okay, so we have Asian highs right here. So that's another confluence. Okay, now, can we see anything else within this first area that we identified, this first sell zone? Let's refine it. Okay, let's refine it. Let's see, let's have a look. Okay, we have an hourly fair value gap as well inside of it, but we don't really need to mark it out because we already have a 4 hour. So that's nice to know that the time frames are overlapping, right? We also have the start of this 1 hour OB. Okay, look at this order block. It's the series of the previous direction candles before the move down. Look, we have, blue, blue, blue. If you guys have the basic trading view chart, okay, then this candles will be green and then the down candles will be red. So look, we have blue, 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 and then all of the moves down. Okay, so this is also known as an order block, okay, supply area. Okay, so we also have this lining up with this area as well as Asian lows. Okay, Asia lows as well, exactly. We have Asia lows as well. So we have multiple things lining up here. Okay, we have a 4 hour fair value gap. Okay, plus Asia lows. Okay, plus, what else did we say? We also have a 1 hour OB order block. Okay, we also have 1 hour OB and fair value gap. Where is the and sign? Where is the and sign? There we go. And there we go. And it's annoying. Hello? Video froze. Yeah, bro. Wi-Fi is bad. Hello, we back? Are we back in town? Are we back in town? Can someone confirm to me if we are back in town? My lag, I am in Kenya, guys, so bear with me. The Wi-Fi in Kenya is dookie. Wi-Fi in Kenya is dookie. I'm cooking. Thanks, bro. I do try to explain these. Back in town. Let's go. And then says, Friday says, let's go. Let's go. We're back in town. Apologies for that, guys. Bear with me. Okay. Where were we? Where were we? Where were we? I lost my train of thought now. This lag made me lose my train of thought. I was saying, okay, guys, about the Fibonacci retracement tool. Okay, you want to play around with it. Okay, look, there is no rules to it. Okay, as long as you're pulling it from a valid trading leg from the high. Okay, look, we pulled it from this high, okay, down to this low before. Okay, look at this. We pulled it from this high here down to this low at first. Okay, but what you can also do, guys, is also pull it from this high, okay, all the way down to the low as well. Okay, and this is also another very powerful tool, is that you're stacking fib levels, right? You are stacking fib levels. So if you see the Fibonacci levels lining up again twice, right, with the same area, then you know that it's also a valid zone. Look at this. The 0.618 is lining up with the previous 786 right now, right here in our sell zone. Okay, so we know that this is a valid sell zone, right? And then also, what else do we see? Nothing else. Not really, nothing else is lining up. Okay, and once you've done this, guys, and you've identified, just remove it from the chart. You don't want to have this on the chart. It just makes it so messy. Okay, you just pull it, see where the fib levels line up, and then you mark it out and you leave the rest of it. Okay, now let's go back to the hourly to see if we see anything else. Let me drag this a little bit longer. There we go. Not really. You don't use the 40% zone? No, brother. 0.5 zone, okay, which is the 50%, and I use the 0.618 zone and the 786. The market is overextended, meaning it will return to the 4-hour value. The fib tool is lining up. Exactly. The market is super overextended. Okay, now as I was saying, on the higher time frame, okay, we are expecting gold to come and sell off into this area here, 3,930. Okay, we did say that at the start of the live stream, if you guys missed it. Okay, so overall we do have a short bias on the higher time frame. However, since the market is very overextended, okay, the chances that we do have a retracement before hitting this big higher time frame target is very high. Okay, we can also do this. Okay, this is a possibility where we do dump first, okay, and then we get the retracement. Okay, that is a possibility. However, for us, it would be better if price came up higher, because that would give us a better entry for our shorts. Okay, exactly. It needs to come up and grab liquidity, because there's a lot of sellers making too much money right now. The sellers are making too much money and the buyers are not getting paid enough. So what do they need to do? They need to flip the script, right? When the balance, okay, the pendulum is swinging too far to the one side, okay, it needs to rebalance itself. Okay, so that's why the buyers need to start getting paid again. Okay, the buyers have been getting absolutely wrecked this whole time. The sellers have been having an absolute field day. For the sellers, it's holiday. However, holiday always has to end at one point, right? All good things come to an end at some point. So the market will have to retrace at some point. Thank you, brother. I do appreciate it. Thank you for the follows. D, thank you for the follows. Kels, thank you, brother. Thank you. Can you allow questions after this analysis? Friday, shoot your question. I will try read it at the same time. Fancy Pants, thanks for the follow. Mali, thank you for the follow. Mignon dos Vechechos, thank you for the follow. M, thank you for the follow. You guys got some crazy usernames. Okay, so I think these are the best sell zone levels really that we have identified, to be fair. Let's see if we can see anything else on this area. Let's see. Do we have anything else that could potentially be interesting? Let's scale down to the 30-minute. Do we have any fair value gaps on the lower time frame that we haven't filled yet? No, we have no fair value gaps here. Okay. How long have I been trading? I started trading at 17, brother, and I'm 22 now. I dropped out of uni at 19 to trade full time. And so yeah, do the math. What would you recommend? I have a leverage of 1 to 1,500, but what makes sense to choose 0.01 or 0.02? I understand the first half of your question, Pepito, but I don't understand the second half, because when you're creating an account with the leverage, okay, you can choose depending on the broker that you use and depending on what leverage they offer. For Vantage, my account is 1 to 1,500. But the lot size all depends on where you put your stop loss, brother. The lot size depends. If you have a tight stop loss, you have a bigger lot size. Okay, if you have a bigger stop loss, you have a smaller lot size. It all depends. Okay, so that's how it is. 4120 might be impossible, right? 4120, 4120, 4120. Where are we? I mean, bro, like it's not impossible, right? It's not impossible, but look, let's be logical about this, guys. Let's be logical about this. This is also where you need to start using like your brain cells a little bit. Okay, so we have marked out these sell zones on the chart. Okay, we know, okay, well, at least through our analysis, we expect price to come here. Okay, this is where we're expecting price to come on the higher time frame. Now, would it make sense for gold to come all the way up here, okay, at 4,220, okay, before taking the target, which is literally just down here? It wouldn't really make sense, to be honest with you. Okay, it just doesn't look like it's likely. Okay, it's possible if we start pumping like crazy out of some news event or something. However, if nothing like that happens, then it's very unlikely that price is going to do that. Okay, what is more likely, right, is that we either come up to at least the 50% area of this range, okay, and then we come down to target this area. That is something a little bit of more likely scenario. Okay, you're breaking into this chart into pieces. Hell yeah, John, I break charts into pieces every single day, man. That's what we do out here. Pepito, your equity matters as well. Yeah, I agree with you, bro. Bist du aus at order de cake sending. I don't speak your language, broski. What's an order blocker, please? An order block quickly is the an order block is the series of the candles in the opposite direction before a move down. Okay, look here. Up candle, up candle, up candle, up candle. Okay, series of down candles. We break structure, we close below the low. This is a valid order block. Okay, price needs to close below the low, okay, in order to confirm that this is a valid zone as an order block. Okay, you can also mark this out as an order block. Okay, right here. What is it? Because it is the up candle. It is the candle in the opposite direction before a move down. Okay, right here. You can mark it out. Boom. This is a valid OB as well, not buy zone. Ignore that. That's wrong. Okay. And I want price to see go in the time now. Go to. You guys are killing me, man. You guys are killing me. I want price to see go in the time now. Go to 440 4-hour fair value gap. Oh, bro, I'm not making fun of you. You're just funny, bro. You're just funny, man. You're just funny. I don't know what you said, Milan. I'm so sorry, bro. I have no idea what you said, bro. I have no idea what you said. You should have stayed in uni to. Hey, bro, it's chill, man. He probably doesn't speak English. Let me see what you're trying to say. I want price to go in the time now to go to the 440. Where is 440? 440 here. Okay, perfect. Yeah, sell zone. 440. Yeah. Perfect. Okay, good. We're on the same page, Milan. The English is not Englishing. No, not at all, man. It's not at all. I don't know what language he blended that with. I have no idea. But I struggled. My brain like completely bugged for a second. I completely bugged. But yes, 440, brother. 440 is my sell zone. It's right here. So yes, I would expect price to come up. Okay, 100%. Dimmy, TikTok's gonna ban me now for clowning. Sorry, brother. Sometimes my English is not good, bro. Don't apologize, bro. I'm just having fun. I'm just messing around. Okay. So on gold, do we see anything on the lower time frames that could add to our confidence levels? Let's scale down. Do we see any equal highs? Do we see any session highs? Do we see any unfilled fair value gaps? Okay, these are all the thoughts that are coming into my mind. Do we see anything that could confirm us that we want to go up? Okay, guys, I just noticed something. I did just notice something. Okay, look, we have this 15-minute fair value gap here. Okay, which hasn't been filled. Okay, funnily enough. Okay, and this is on a more micro time frame. Okay, so if gold doesn't want to push up all the way up here, right, because our target is fairly close, guys. Our target is fairly close. We are looking to target the previous daily low today, okay, as our first area, okay, because it would make sense, because the price during a day or during a new day, we always either take the previous daily low or the previous daily high. So since our target is so close here, right? It wouldn't make sense if price pushed up like crazy today all the way up to, you know, our 440 area. So maybe let's look at a more micro, let's look at a more, you know, zoomed in sense, and where could price potentially reject to, okay? And I have just identified right now, I just saw it, this 15-minute fair value gap here, hanging around 4,006, okay? Which is also perfect because we also, look, there's a reason, guys, that look, this high here, there is a reason that this high, we didn't tap into it. Right? Why does market do that? Because it wants to build and engineer liquidity. Okay? So we have a bunch of highs up here resting below this 15-minute fair value gap. So what would make sense, right, is if maybe price did come up, okay, we swept liquidity, okay, and then we actually did maybe want to make our move down to the previous daily low. Okay, thank you Andrea for the follows. Thank you WRSSG5. Thank you QWERTY for the follows. Ovez, thank you. This is my mentor, by the way. Hell yes, Alicia. I appreciate you tuning in. I appreciate every single one of you. G, thanks for the follow. Welcome to 1% Legends. Welcome to the 1%. I hope you guys are finding some value out of this. I am trying to explain these. Okay, so on a lower time frame, okay, we have just identified this 15-minute fair value gap. Is there any other confluences that could line up with this area? Let's check. Let's pull whenever you see price in a consolidation like this. Okay, whenever you see price in a consolidation like this, what is the first thing that you want to think of? You want to think about volume profiles. Okay, you want to think of the volume profile. Okay, because whenever price is stuck in a range, okay, you need to identify where is the top of the range and where is the bottom of the range. Okay, so the best way to identify this is using the fixed range volume profile. Hold on, let me catch up with all the followers here. Stuffy, thank you for the follows. Yogi, thank you for the follows. Rue, good vibes. Hell yeah, followed me. Hell yeah. I want an Integra. What's an Integra, brother? Appreciate the time, brother. Yogi, appreciate your time, guys. Your time is your most precious asset, and you're choosing it to watch some random guy that you've never seen on live stream talking about candles. I love you people. Friday is mandatory. Price will sweep or take the previous daily low or high. Now, mandatory? No, nothing is mandatory in trading. Okay, if price was to follow exactly our analysis and exactly what you think, then we would all be super rich, right? Because if you're good at reading price, it means that price action will always do whatever you want it to do, which is not the case, right? So we can always have a plan. In trading, you want to have a plan, right? We have a plan to go down and we have a plan to go up. Okay, now it's up to the market to see, okay, which of these plans does it want to follow? Okay, as a trader, you want to be prepared for both scenarios. The best young teacher is after. Ooh, teaching order flow, I see. Something like that. Iamachis 56739. Thank you for the follow. Diani Ausawing. Thank you for the follow. I have seen TJR teach anything. No, Jeff, low-key, TJR, you know, he's the guy who taught me everything years ago. Like, I found TJR when he first started posting on YouTube, and I would not be here if it wasn't for him. Vontage, thank you for the follow. Milan, thank you for the follow. TJR probably laughing at the people that think he's a trader. No, bro. Nah, Jeff, like for real, bro. For real, like TJR, he really helped me out loads, man. He was one of the only people that I was actually putting out information on YouTube for free when everyone else was trying to scam their audience. He was honestly, I can't say anything bad about him because he's the reason I was able to, you know, learn this skill. And then I obviously found my own path, but without his videos, it would have been impossible. It would have been impossible because at the time I didn't have money to spend on a course, right? And I found some guy that was explaining every single concept, part of his strategy, all for free on YouTube. So, you know, there is some, just people just like to hate on others, but me personally, I have nothing but love for him, and you know, yeah, that's all I really have to say about that. Okay, so now where were we? We've just identified this 50-minute fair value gap up here. Let's see if there's any other confluences that are lining up with this zone. Okay, so we pull the volume range profile from the left-hand side and we drag it to the right. Okay, the start of the consolidation to the end of the consolidation. Okay, what is consolidation? For all of you guys that you don't know, the advanced term is accumulation. Okay, consolidation is what beginners learn. When you first learn trading, you look at a video on YouTube, it's going to tell you market moves in downtrend and uptrend and consolidation. Okay, however, once you get a little bit more advanced, okay, you'll understand that these concepts transform into accumulation, manipulation, and distribution. Okay, quickly, what is accumulation, manipulation, distribution? This is the three ways that the market moves. Okay, market is accumulating, okay, engineering liquidity, building up stop losses to the highs and building up stop losses to the low. Okay, then we also have the manipulation, which can happen at the lows, okay, or it can happen at the highs. Okay, right here. So after a period of consolidation, of accumulation, you will always get some sort of manipulation. Okay, so either price is going to break out to the low, okay, like this, or we're going to break up to the high. Okay, and then what do you get after that? You get a period of distribution. Okay, distribution is price expanding in a direction. Okay, so that's how the market moves: accumulation, manipulation, and distribution. I did go through an in-depth guide of this 2 days ago in the live stream. I'm not going to explain it now exactly. However, okay, what was this volume graph thing on TradingView? Milo, this is the fixed volume range profile. Okay, and so whenever you see price consolidating or going sideways, you always want to use this tool because it's helpful. Okay, now, am I going to enter these trades off these levels? No. Okay, I'm not. However, you can use these as confluences, okay, and you can use these as support and resistance levels. Okay, so how you want to pull it is you want to click on it and you want to click on the candle where the consolidation move started, which is here on the left, okay, and you want to drag it all the way across to the end. Okay, what this is going to show you, okay, it's going to show you where basically the most volume was traded within this sideways range. Okay, so the top half of this, you can see, has been acting as resistance quite a few times. Right, we came up, we tapped it once here, then we tried to break out of it, then we came back inside, we tapped it again. Okay, we've only tapped it twice yet. This high came close, this high came close, but we didn't quite tap it. But you can see, right, what we can see, which is interesting, guys, is that this area, also known as the value area high, it's lining up perfectly, well, not perfectly, right, but it's lining up in the same area as our 15-minute fair value gap. So that's perfect. We already have one or more confluences to determine that this could be a valid sell zone. Okay, now you can see, look, the bottom half of this volume range profile is acting as pretty heavy support, right? We have bouncing off this multiple times, once, twice, 3 times, 4 times, you know? So this is just a good, there is some traders that only use this to trade. How would you use this to trade? Well, for example, if price comes down to the bottom area, okay, you can use this to trade to the middle line, okay? And if the price stays at the middle line, well, you can use this to target the top line, okay? For example, also in the opposite direction, right? Price came up here to the top area, okay? You can see that it's acting as resistance. What you can do, you can short it down to the middle line, okay? If price doesn't hold the middle line, you can short it down to the bottom. Okay, this is basically a tool that scalpers use sometimes, okay, to, you know, identify where price wants to go whenever you're consolidating. Okay, now, since we have identified this range up here, which is perfect, I would expect, since we are targeting the previous daily low today, okay, I would love for price to come up here, and if we get some sort of reaction on the lower time frames, I would love for this to short all the way down here. Okay, now guys, obviously these sell zones are not the be on end all. Okay, if we come up to this area and we don't get a reaction, it is a no trade. Okay, these are just areas on the chart that allow us to be prepared. Okay, we are not entering straight away as soon as these zones get hit. Okay, we always wait for a lower time frame confirmation. For me personally, to enter my trades, I wait for either a 5-minute break of structure or a 5-minute inverse, and then I scale down to the 1 minute. Okay, I wait for a pullback into some sort of 5-minute fair value gap, and then a 1-minute inverse is my entry. Okay, bro is trading PBD, he is profitable 100%. No, bro, I'm not profitable. I haven't made money in 5 years with trading. I'm still struggling, man. What's the name of that? It's the fixed volume range profile. This is not financial advice. This is only demo trading. What was this volume graph thing on TradingView? It says volume range profile. I've set sell limits for 4,000 and 4,010. Perfect. I wouldn't. Now, limit orders is risky. Limit orders is risky. Me personally, guys, I go absolutely wrecked with limit orders. I go absolutely wrecked in the past, right? Now, sometimes I do use them here and there. However, I do always prefer to execute with the market order because, guys, especially in times like these when the economic uncertainty with all the news coming on, right? You never know when the news event is going to drop. Trump tweets something, price absolutely rips in a direction. You have a limit order set for a level, even though it's a valid area on the chart that is probably going to give a reaction. News doesn't care about that. News doesn't care at all about that, right? So it would just go straight, you just have an unfortunate SL because your analysis might have been right, but price just was, influenced by other areas, other things. Right, so what I always wait for now is instead of setting a limit order, I always wait for a reaction in my zone. Okay, that is the best way that I honestly found with price action, especially in these conditions right now. Which conditions, one day we're pumping, one day we're not. It's crazy. It's crazy. So limit orders is a little bit risky. However, guys, however, there is a caveat to this. So for example, okay, let's say this. Look, let's say that we were in Asian session, okay, and we wanted to take a long on gold, okay. We wanted to take a long, okay, if price is gonna tap back into this 5-minute fair value gap, okay. Now, in this case, I would actually use a limit order, okay, because I know that the moment that price wants to tap into this gap, I know that I want to be filled. So in order for me to get the best possible entry, I will set a limit order right here, so that when price comes into the gap, I would be filled and then I would take off. That's the only times that I would use limit orders is when I'm looking for entries and I'm scaled in, okay? But I will not set higher time frame limit orders because you never know what price wants to do. You never know what price wants to do. I only use it for entries to get the perfect entry so that my risk to reward is set. That's the only thing. Where would your SL be? This is an example. I wouldn't take this trade, but if I was to take this trade, right, I would have my limit orders set here at the top of the fair value gap, okay, and then the SL, right, usually the SL I always go would be below the swing low, okay, below the low. That is always the safest place. However, what I have been experimenting recently is also putting the stop loss below the fair value gap, right, because if I am expecting this fair value gap to hold, okay, if I'm expecting this fair value gap to push us higher, right, price shouldn't come all the way down, okay, below this area, right? This is the start of the value gap, so technically your stop loss should be safe. However, that being said, guys, there has been some times where I have done this and I have got stopped out, right? Because price would just come here, wick, right? We'd have a big wick down and then we'd actually come up, right? Which is just unfortunate. So it's all about finding a balance. I guess maybe even below this low would have been the safest, but then you are sacrificing risk to reward. It depends where your first TP is, right? Look, guys, if I were to take a trade, okay, this would be my first take profit here. Look, this unfilled 5-minute, right? With also a high resting below it, right? We have liquidity resting at fair value gap. This would have been my first TP. Right? So my first TP is always usually a 1-to-1 risk to reward. So this would have made sense. Okay, and I would have probably put my stop loss, since I have a 1-to-1 at least for a first TP, I could have even put my stop loss here. Right? You can see that we would have got stopped out of this, right? Because also this was consolidating and this was an Asian session, so that's why I didn't take the trade. Can you explain your strategy again? Okay, so with my strategy, okay, I don't have a specific model that I trade. Okay, what I do is I manage to just read price action in general. I start off from the higher time frame and I work my way down. Okay, I have a draw of liquidity on the higher time frame. I identify where price wants to go on the macro scale, and then what I do is I scale down to lower time frames and I find areas on the chart where multiple confluence levels line up. Okay, for example, for those of you guys that are new in the live stream, this morning, like 30 minutes ago, we were looking for areas on the chart where there is the most confluences lining up. For example, this sell zone here, we have 4-hour fair value gap, Asian lows, 1-hour OB, blah, 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 blah. Okay, so these are the key levels that I identify on the chart, and I wait for price to come into this. I wait for a reaction on the lower time frames, and then I decide whether I want to take the trade or not. What time do you go live? I go live every single day, guys, during the week, twice a day, London session and New York session. Okay, I went on live 1 hour ago, so whatever time zone that you guys are currently in. Okay, 1 hour ago is when I usually go live in the morning, and then in the afternoon I go live in New York session. So for me, that's 4:30 For people in the UK, that's 2:30. So it all depends on what time zone that you are. Kindly repeat your entry model. My entry model. Okay, my entry model is, well, I'm gonna speak it. If you guys don't trade with fair value gaps, then you're probably not gonna understand. Sorry, not with fair value. If you guys don't trade ICT, then you're probably not gonna understand. But basically, what my entry model is, okay, is a 5-minute inverse. Okay, once price taps my zone. So let's say this is my buy zone right here, for example purposes. Okay, right here. Okay, this is my buy zone. Price now has come down into my area. Okay, and now the first thing that I'm waiting for, okay, is either a 5-minute break of structure, okay, or a 5-minute inverse. What is a 5-minute inverse? It's when a candle closes above or below a fair value gap. Okay, why? Because this is going to show me that price wants to change direction. Okay, that's step one. Okay, wait for a 5-minute break of structure or a 5-minute inverse. Then step two is I wait for a fair value gap, a new fair value gap in the direction that I want to take a trade to be created. Okay, so you can see here on the 5-minute time frame, we would have created this 5-minute fair value gap. Okay, right here. So once we have created this 5-minute fair value gap, what I will do is I will wait for price to tap into it. Okay, I will then scale down to the 1-minute time frame. Okay, and what will I wait for in the 1-minute time frame? I will wait for either a 1-minute inverse again, okay, because this is going to confirm to me that price wants to continue in the direction, or a 1-minute break of structure. Okay, which you can see that price did come into this 5-minute gap. We then got a 1-minute break of structure with this candle here. Okay, so technically speaking, if I was to enter this trade, this would have been my entry. Okay, and now obviously this candle is a bit annoying because it would have messed up our risk to reward a bit. Ideally, you don't want the candle to close that high up, right? But if we were looking to take this trade, right, our entry would have been here, and our stop loss, well, it depends. You can either just put your stop loss below this 1-minute break, because technically price shouldn't really have to go any lower than this, or to be safe, you can put it at the bottom of the fair value gap like I was explaining. But obviously, since we broke up so high, you know, this wouldn't have been a good trade to take, to be fair, because the risk to reward wasn't good. Why? Because our TP1 is here, right? Our take profit 1 was right here. So, you know, it just wouldn't make sense for us to take this trade because it's not a 1-to-1 risk to reward. It's not even a 1-to-1 to TP1. Literally TJR strat. Yeah, pretty similarly actually, bro. Pretty similarly. Yeah, I learned from him, so it does make sense. However, I have adapted it to it. He doesn't have buy zones and sell zones, right? He doesn't mark high confluences errors on the chart, right? He doesn't do that. If you look at the way that he trades NQ now, the guy just waits for a liquidity sweep and a 1-minute break of structure. That's literally all he waits for. So yeah, it's a little bit different. I've adapted it for myself, and that's what you should do, guys. You know, I don't want you guys trading the same way as me or trading the same way as everyone, unless it obviously fits your style of trading. I hope that explains a little bit of my entry model. I hope you guys do understand that. Now, in terms for gold, as we say, we are stuck in this consolidation level. So what is this, guys? What is this showing us? Okay, it's showing us exactly what I was explaining before. Right now, we are in a period, in an accumulation zone. Okay, so what would we expect next? Okay, if price wanted to break out of this accumulation zone, okay, we would expect some sort of manipulation. Okay, either we're going to manipulate the highs, okay, or we're going to manipulate the lows. Okay, ideally, I would love for price to come up and manipulate the highs, okay, and tap into this 15-minute. Because why? Because we have a short bias. So ideally, we manipulate the highs to then come lower. Okay. However, if we do decide to manipulate the lows first, okay, and we take the previous daily low, right, then maybe we could also catch a retracement targeting up higher. Okay, so right now this is a no trade zone. Okay, this is an area where I would highly recommend you don't trade in, right? Because even if your model is valid, even if your strategy is telling you that this is a good trade, right? If you zoom out, we are chopping sideways. So the chances of you getting stuck within this consolidation, getting stopped out is pretty high. So what do we wait for? We wait for price to exit on this accumulation area. Okay, so we will wait for price to come into our area, which is our first sell zone. And then we will go through my entry criteria, which I just went through with you guys, right? 5-minute break of structure, 5-minute inverse, tap into a 5-minute gap, 1-minute inverse entry. okay? And stop loss according to where we break structure. Target will be the previous daily low, okay? Because that will complete the full model, guys. That would complete accumulation, manipulation, and then we would get the distribution lower, okay? That would be the full model, the 3 ways that price moves. I'm looking for sells at 410. You? Well, perfect, brother. Perfect. Exactly. Well, this is my first sell zone. Yeah. So we have a similar analysis, right? We have a similar analysis. This is my closest sell zone to price, right? This is my area here. Okay. The Chess, thank you for the follow. LLC boy, thank you for the follow. King Red, thank you for the follow, and thank you for sharing the live stream. I do appreciate it. Thanks for explaining. I got you, John. Lona, thank you for the follow. Maniman, thank you. SK, thank you. Which time zone are you in? I'm in GMT +3. I'm in GMT +3. Lizzie Beats, thank you for the follow. Teflon Pan, thank you for the follow. Juliax, thank you. You guys are the best. John, thank you. Uptrends, Soman, Stafflin, Cheese Guy, The Chess. You guys are all the best. If I trade London session, do I become a roadman? Depends if you wear it depends how you dress up, man. It depends how you dress up during London session. I cannot read your name, Alvarez, but thank you. Lucian, thank you. Which broker do you use? I use Vantage, brother. Everyone in my Discord also uses Vantage. I am affiliated with them before you guys start going crazy. Yes, I am affiliated with them, so I do get paid, but that's how I can keep my Discord free, because my members will come from my lives. They say, hey, Spikey, I want to join your Discord. Is it free? Yes, it's free. You just have to sign up to Vantage, so that Vantage pays me, and then you don't have to pay me. And then you can have access to the Discord. So that's the deal that I found, because guys, if you were to do something from the moment that you woke up to the moment you go to bed, okay, that's all I do in the Discord is trade and help people. Okay, I'm still don't have the Lambo in the garage yet. I am still on the come up. Okay, so it would make sense for me to monetize my time in some way. And so if I'm not taking the money from you, I would rather take it from a platform that has millions and millions and millions of dollars. So that's why I affiliated with the broker.
Rare covers of your
Let's put some money on. Let's put some music. Okay, so guys, we have identified our sell zones on gold. There isn't really much things that we are left to do, right? Because price is consolidating. Okay, we're obviously not going to trade now because it's lunchtime. Okay, now let's quickly go through NASDAQ, and then I'm going to get off live stream, guys, because this is my time that I usually have lunch. Okay, I have not eaten yet. I'm starving. Okay, and then I will be back on for New York session as always, and we will see if we can take any trades today. Okay, please do keep in mind that all the analysis that I have done in the gold will be posted on gold will be posted. All these levels will be posted in the Discord. As I just said, for all the guys that are new, the Discord is completely free. The only requirement is that you need to trade on the same platform as everyone else, so that I also get paid from them, and then also we all have the same conditions, right? That's the best sort of way that I found. Now, on Nasdaqistan, what do we potentially wait? Dunga, thank you for the follow. Canary, thank you for the follow. Richmond, thank you for the follow. Okay, we are currently reacting on Nasdaqistan off this buy zone that we had beautifully. Unfortunately, we were sleeping during this time. We were sleeping, so we weren't able to catch this move. Okay, now let's take everything away from the chart. Okay, and let's see this from the beginning. Okay, on the daily time frame, what do we see? Have we taken the previous daily high or previous daily low? Yes, we have taken the previous daily high. Perfect. Okay, we can mark it out. Previous daily high, we've taken it. Okay, now what does that mean? It means that the chances of us coming down and taking the previous daily low today is very low, right? Because we've already taken the high. So we know that shorts all the way down here is already out of our mind. Right, that's already out. It's not even a possibility. Shorts all the way down on Nasdaq is not even a possibility today. However, we are trading currently within this daily fair value gap right here. This is a daily fair value gap that sellers created. So what would we expect? If price was to tap back into this area, we would expect sellers to re-enter the market and push price lower. Okay, so we're gonna see, are the sellers gonna step back in at this price range and push price lower on Nasdaq, or are the buyers too strong today and we're gonna go and blow straight through it? Right, the only way that we're gonna be able to know that is if we scale down to the lower time frames. Okay, we've marked out the daily. Now let's see in the 4 hour. Okay, guys, whenever you see a leg like this, okay, as I was explaining on gold, from the high right here to the low, okay, this is a trading leg, okay? Now, whenever you have a trading leg like this and you want to look for continuation shorts or continuation longs, okay, what you want to do is you always want to mark out the 50% level of this range. Okay, so you want to do, you mark it from the high, okay, using the Fibonacci retracement tool, you mark it from the high and you drag it all the way down to the low. Okay, you can see, guys, that we have already tapped the 0.5% level. So perfect. We are currently in a premium zone. Okay, what does a premium zone mean? It means that this is a perfect area. Okay, any area above the 50% level of the Fibonacci retracement tool is a good area to short. Why? Think of it like this, guys. If you are currently broke and you have no money whatsoever, let me put this down a little bit, holy mood. If you are currently broke and you have no money whatsoever, okay, and you have a house with plenty of old stuff, okay, and you want to make a little bit of extra cash, what do? You want to sell these items in your house, right? You want to put them on Facebook Marketplace, you want to go in an auction, you want to try sell them, okay? When you want to trade, when you want to make the most money possible, are you going to sell your 1990s shoes for a discounted price? Obviously not, right? You're trying to put them on sale, you're trying to make as much money as possible, you're trying to maximize your profit. So you would obviously list them on Facebook Marketplace for the highest price possible. That is the same analogy, okay, for the market. Okay, we don't want to be selling, okay, price below the 50% area because this is all a discounted price range, okay? We don't want to do that, right? What you want to do is you only want to look for sales above the 50% area because this is a premium price zone. Okay, this is where all the big banks, all the big institutions, this is where they want to fill their orders. Okay, and you want to be on the same side as all of these big banks and institutions so that you can catch the big moves. So you're saying go shorts. Judge, I'm not saying go shorts. I'm saying the chances of price coming lower right now, as what I'm seeing, is pretty high. However, that changes, right? I'm saying we are currently trading in a daily fair value gap that the sellers left. Okay, so unless the buyers are going to be strong today and we're going to push up higher, okay, we're not going to know. Right now, there is nothing telling me to go short right now. As of right now, there is nothing telling me to go short. Why? Because we also had this 4-hour gap, okay, and if price wanted to come down lower, what would price have done? We would have closed below this gap, okay, which would have meant that price wanted to push lower, but we didn't. We respected it and we pushed up higher. Okay, so for now, the 4-hour time frame is bullish. We broke structure. Okay, now let's go down to the lower time frames on the 1 hour. What does the 1 hour show us? The 1 hour show us that we are still in some sort of mini uptrend. Okay, we haven't got a break of structure to the downside yet. So still, the 4 hour is bullish. The 1 hour is bullish. Okay, so why would I be looking for shorts straight away? I just wouldn't do, right? The only time that I will be looking for shorts, okay, is if these higher time frames, they start flipping. Right? If the 1 hour time frame flips bearish, okay, then I will be interested in looking for shorts, but not before, right? Not before. Uptrend is really weak. It is really weak. Exactly, brother. And since we are in a daily fair value gap, guys, I think this is just a matter of time. Okay, price is just going to want to retrace just a little bit to then come lower. Me personally, I'm leaning more towards a short bias on NASDAQ. However, when I mean shorts, guys, I don't mean shorts targeting all the way down here. Okay, let's be realistic about this. Okay, and the way that we are reacting off of this zone here, okay, this is a very strong candle close, guys. This is not a weak candle. Okay, we came down here, we swept liquidity, we tapped into this 4 hour, and we just bursted up. Okay, so this could potentially hold, and this could potentially take us up to the top of the range. So the last thing I want to do is spam shorts, right, when this thing could just tremble up. Because I don't know if you guys have seen this before, but I've seen this on NASDAQ many times, right? Price action looks weak. We're just trembling down. We're just trembling up like this. Price action looks weak. It looks like it's going to crash any second, but it doesn't give up. This thing it's just fueled by the buyers. The buyers, they just keep buying, and price just fizzles up like this, fills up. And then what's going to happen usually is a big news event happens, or we hit a big resistance zone, and then what do? We come crashing down super quickly, and all of this little tremble market, all these little candles, they get taken out immediately, and you're like, yo, what the hell, man? That's what typically happens. I'm not even kidding you, like for real. It happened here. Look, it happened here on a smaller direction. Look, if we scale down to lower time frames, look, we can see, okay, this is not a perfect example. I have seen it work perfectly, but look, right here, prices just look, we're looking for shorts. We're expecting price to go short here, but we're just trembling up like this, trembling up. It looks weak. Look, all the highs are getting rejected. The candlesticks are closing below. You know, it looks like this thing is going to go short any second, but the buyers, they still buying. And then all of a sudden we hit a level, and then vroom, and market just absolutely tanks, right? It happens very often on NASDAQ. Even here, look at this, guys. This is perfect. This is exactly what I mean. Here, look, weak price action, small highs like this, weak tremble. Buyers, they keep buying it, and then what? This thing, when it rips, it just takes it all. So this might be the same scenario. I'm not saying it might be. I'm not saying it is, sorry, but I'm saying it might be. So I'm not going to be entering spamming shorts too early. Oh my god, let me just remove all these drawings. Holy moly. Boom. Let me remove all these drawings. Alright, there we go. Okay, so what would I be waiting for to look for shorts? Okay, well, first of all, guys, I see currently that we do have this hourly gap right here, which hasn't been tapped yet. Okay, which would make sense. Okay, let's see if also any Fibonacci levels line up with this gap. Let's see if it's a high confluence area on the chart. Let's mark it out from the high, okay, and drag it all the way down to the low. What do you see? Oh, perfect. Look, we do see the 0.618 also lining up pretty close to this hourly gap. Okay, let's also pull the fib from the other high, right? Because you always want to stack fibs as well to see if all the levels line up. Are there any levels lining up? Twice. Okay. So here, not really. Here, we're not really lining up twice. Here, we do have the 0.618 with the hourly gap like this, so we can include this. And then also here, we have the 0.65 and the 786. So we do have two Fibonacci levels lining up here. Okay, so there we go. So we've just identified two areas on the chart which do have a high confluence area. Okay, let's mark those out as a sell zones. Okay, sell zone there. There we go. And guys, once you've marked out your Fibonacci retracements, you don't wanna just keep them on the chart, because it just makes it messy. In trading, you just want to keep your chart as clean as possible, right? Remove the noise. Just only have the things that is the most necessary for you. Okay, you want to keep it simple. That's the most important thing. Okay, so now let's scale down to the lower time frames. Do we see anything else that could, confirm that these are valid sell zones? Well, we do have this 30-minute OB, right? That's also cool. We have this 30-minute OB within these areas, so that's also another confluence, which is nice. Okay, what else do we have that could potentially be interesting for us? If we scale down to the 15-minute time frame, do we have anything? Oh yeah, perfect. Look, guys. Oh, are these equal? No, these are not equal, unfortunately. I thought these were equal. Never mind. They're not equal. If there was equal highs in this, that would be money, right? Because you know how equal highs act in the market. It's like a huge magnet for the price. Equal highs and equal lows, very, very good magnet. Okay, we also have this 15-minute order block, which is also the 30-minute order block that we identified. Okay, so these areas, guys, like, they're not the best sell zones that I ever put out, because there isn't very many things lining up. Let me check one more thing. Let me see, since we were trading, okay, within this sideways range, okay, this was a sideways range that NASDAQ was trading in previously, right here. You see this? Okay, so let me pull the volume range profile from the start of the sideways range all the way to the right, to the end of it. Let's see if there is any levels lining up. Oh, what do you see, guys? What do you see? You see the value area low, the bottom area of this volume range profile of this sideways range is also lining up with our sell zone. So we can include that. We'll include it. There we go. So we do have quite a few confluences within this area. So for NASDAQ, what would I expect? I would expect price to come up into one of our areas and then get a reaction, and that would be the areas that we'd be interested in looking for shorts. Okay, the first sell zone is going to be at 29,992. Okay, let me mark these out. 29,992. And guys, what do you also see? This sell zone is also a psychological level, right? 30K. 30K is a psychological level as well, right? So that's also another confluence, right? Psychological levels, 30K, 30.5K, 31K, 31.5K, 32K, 33 point, these are all psychological levels, right? When the average trader looks at their MetaTrader 5 or their trading view or their broker chart and they see a round number, right? Us humans, we are psychologically attracted to round numbers. Okay, so that's why it can be used as a confluence, because once the average retail trader or the average trader like me and you, they see, oh, Nasdaq is at 30K. Let me hop on the price and let me see what it's doing, right? And that might make them want to enter a trade, right? So that's why it's a psychological level, because it could bring people into the market. Okay, so we can use these as confluences. Quinton, thank you for the follow. Zima, thank you for the follow. Z-Man, thank you for the follow. CEO, thank you for the follow. You guys are the best. What is this pair called on TradingView? This pair is called Nasdaq G-Money. This is the CFD version. Bog, thank you for the follow. 1% shared the live. Maybe he is onto something. Why are you laughing so much, GG? I like you guys. Why are you laughing so much? 7 is like, why are you laughing? You're not supposed to be laughing. Arnie, thanks for the follow. Albert, thank you. Life of Mrs. K, thank you. Vibe, thank you. Okay, now guys, what if Nasdaq doesn't want to come all the way up to our area? Okay, what if we don't want to come up to our area? Because it is possible, right? It is possible. Maybe Nasdaq has actually come up enough, okay, and price says, okay, I've had enough. I want to come down now. Okay, now where could we potentially want to come down to? Okay, so whenever we are in this little mini range, okay, you want to pull the same concept that we used on the higher time frames. You still want to pull your fib, okay, because you want to see where your discount and your premium levels are. Okay, here we go. So you can see that price already tapped the 0.5 level. So we entered a premium zone. Okay, so technically price is safe to come down from here. Okay, however, I would not personally enter shorts here. Why? Because I have sell zones above. I would prefer price to push up higher. The only way and the only condition that I would even enter or even think about entering shorts from this area is if we start getting some serious displacement down. Okay, now what does that mean? Guys, when in a market, when the market is trending up like this, okay, we are forming higher highs and higher lows. Okay, market is in an uptrend. Now, if we want price to, if we expect price to reverse, okay, what would happen? We need us to break this uptrend. So what does price need to do in order to break the uptrend? We need to come down, okay, and form a lower low and then a lower high, okay, to then continue the move down. This is a classic market structure shift, okay? Price is making higher highs and higher lows. We then hit a resistance level, okay? Price then makes a lower low, okay, closes below the previous low, and then continues down. Ideally, this would be our optimal entry, right? We would draw the Fibonacci retracement from the low, from the high to the low, okay? And then we would wait for the 50% area to get hit, and then this would be the optimal trade entry. Right now, the same scenario applies for Nasdaq now. Right, we are currently still trending up in this little SHITTY uptrend. I can't say it because I will get banned. Okay, so right now we are trending up, higher highs and higher lows. In order for us to know that price wants to reverse, well, we are going to have to wait for a lower low to be printed, and then we will wait for a lower high. Okay, and that will be the only way that I'll be looking to be entering the shorts. And also nowadays, guys, not nowadays, right now, it's outside of London session and New York session hasn't started. So I would really recommend you don't trade during these times, okay? Why? Because I explained this multiple times, okay? When you want to go do your shopping, okay? When you want to go to the grocery store and you want to fill up your fridge because you got nothing in the fridge except beers and eggs, okay? And you want to go do some shopping, what do? You go to the grocery store when they are restocking the shelves. Right, you go when they are bringing in the fresh produce, they are bringing in the fresh new meat, that nice T-bone steak that you want. Okay, you're coming in when they are just delivering the fresh produce. Okay, you're not going to the supermarket at 3 a.m., right? When everyone who has just shopped during that day, you're just going there to pick up the scraps. Okay, that's exactly what trading outside of session times is, right? You want to always be trading within the first 2 to 3 hours of a session. Okay, anything after 3 hours of a session being open, you are just picking up the scraps that nobody wanted, right? It's just you being desperate because you really want to take a trade and you don't understand that the time and your price and your setup need to be aligned. Okay, so don't go shopping at grocery stores at 3 a.m. Go shopping once they restock the aisles. Okay, and that's the same principle. Okay, narrowed down in a simple concept. This is giving me depression, man. What is this song? Jesus, what did YouTube put me on, man? YouTube trying to make me YouTube trying to make me go crazy or what? Alright, guys. Anyways, I'm losing my my strength to speak. I've been speaking for a long time and I'm still fasted. Okay, so I appreciate every single one of you in the live stream. If you are new to me, yeah, it is spa music, Bills, for real. But honestly, isn't it quite like soothing? Like, you know, we trade to be focused, okay? And when I do my analysis and I'm trying to have clear thoughts for you guys so that I can simplify these concepts as much as I can for you. If I had some rap music or something, I just would be distracted. I would just be distracted. So I do like to have a little bit of elevator music, a little bit of spa music, because, you know, nowadays in life, we're always distracted by noise, right? We have rarely moments where it's just quiet. Okay, so it's just, I do appreciate these moments because it's just me speaking to you guys. Okay, it feels good. So if you guys are new here and you don't follow me, please do, so that you are alerted every time that I do go live. I go live every single day, Monday to Friday. Okay, and I speak about concepts and I try to simplify the market as easy as possible. Okay, I will be going live in, 1:30 for me now. I will be going live in a couple hours and we'll be trading live together. Okay, and I hope you guys learned something. If you guys are interested in learning more from me, I do have my Discord group, which is completely free, as I was explaining. Okay, the only requirement to join is if you want to trade is trading on the same platform as everyone else, so that we all have the same conditions. And also I am affiliated with my broker, just to be transparent, but this is how I can keep the Discord free for everyone, because you guys will join, you sign up to the same platform. Vantage is the platform that we trade on. Okay, the platform will pay me, okay, and so you don't have to, and you know, you get access to all my trades, all my analysis, all my free information. We have about 45 people in there for now, which is pretty cool. And that's about it, guys. That's about it. And if you guys don't want to do that and you just want to watch me on live stream, well, I hope to see you again. And yeah, that's about it. Thank you for all the follows. Conocimiento, Hayata, Hajak, Play by Toys, Judge. Thank you, guys. Thank you. And peace and love, guys. Really, peace and love. I do appreciate every single one of you. I do appreciate every single one of you. I'm very grateful. Thank you, and see you in a couple hours. Bye-bye. Spiky out in 3, 2, 1. Peace.